Joining me now, Evan Lucas, the Chief Market Strategist at InvestSMART. Evan, good morning to you. So a lot of talk, obviously, about the British election at the moment. What are the markets doing leading up to that? Where are the concerns?
Yeah, look, it's in the last sort of 24 hours alone is actually where the nervousness has really started to ramp up. So if you actually have a look at it since Boris Johnson called the election, in fact, even just before that, and then the lead up to the last 24 hours, the pound has absolutely exploded. It got to a 3.5-month high. It's the strongest position it's been in almost 2 years. But in the last 24 hours, that YouGov poll that came out yesterday that suggested the possibility of a much, much smaller majority that Johnson can control has sent a bit of a tailspin in terms of where markets are. It's not actually the pound itself, it's the markets that are outside of that. Probably nobody really looks at unless you're an institutional trader. And that is basically what we refer to as their insurance market, the swaps market. It's at the highest level of concern it's been since before Brexit. And that, I think, needs to be really put out there. There is general idea that maybe it's going to be much, much closer. The possibility of a Corbyn-led coalition, and it will be a rainbow coalition, is now really, really being priced in. The interesting thing that isn't as reactive as the currency is that if you look at UK mid-cap and small-cap equities, they've actually been bought at their biggest level in over 7 years in the last 2 months. So there is certainly optimism that it's going to happen, and whether or not that's what you want to look at is a different story. But the last 24 hours has just started to see a little bit of nervousness, and therefore tomorrow in Australia, it will be a very interesting trading day indeed.
Well, it's typically about Jeremy Corbyn. I mean, he wants to take, if he gets in, 10% of large firms' equity, right? So, I mean, I was reading plenty this morning about how businesses are already looking to leave the UK if he gets in, because the taxes will just be way too high.
Yeah, and it would make the UK possibly the highest business taxing nation on the planet in terms of what he is proposing, and the amount of take-home tax that he would actually grab out of that side. So the FTSE 100 companies would all have that additional 10%. It would also see the highest 10% of income earners also see an increase of upwards of 10% on their income tax. So it is quite strong. It's why there is general concern that if that was to happen, what that would actually mean economically, and that is clear. We've seen the threat from Brexit and seeing some of their big multinational firms actually rebase themselves, particularly into places like Frankfurt, also into places like Amsterdam, and then also Brussels. But this would be another step. This would probably force several firms, particularly towards the States, in terms of the really big sort of dual nationals across the Atlantic. That's what the real threat would come from.
Yeah, Evan, Westpac's got its annual AGM today. You got your popcorn ready?
I do. It's going to be spicy. There's no doubt about that. They are going to register their second strike. And more importantly, it will come down to a lot of questions around the actual governance of the board. And there is growing sort of rumours that particularly some of the big industry funds that have sent representatives today are going to actually have the knives out quite heavily. The interesting thing to also point out, though, is yesterday they completed their actual share purchase plan that they originally announced back at their numbers before the Austrac come in to actually buffer themselves against this, and it was well overbid. So it closed yesterday, 770 million. They were looking for 600 million, and that includes the fact that they're excluding $68 million that people were given the opportunity to give back to them after that whole debacle. So it was even more overbid than what actually came through in the end. So they're still getting money. They're still obviously being backed, but today will be a very, very volatile AGM indeed.
All right. Well, after weakening growth for a while now, Evan, we are heading into that trading period where people tend to spend a little bit more. Where is consumer confidence at the moment, as far as you can tell?
Yeah, and that came out yesterday. Consumer confidence is at 95. So what I mean by that is that at 100, we're neutral. Below that, we're pessimistic. Above that, we're optimistic. And it's the lowest read since May. And realistically, what you need to look at is that it's been getting worse and worse and worse since the RBA started cutting rates. We have been conditioned pretty much since John Howard in this country around the idea that if rates are moving up, it's obviously that the economy is good, and moving down that they're bad, and that is a fair comment in terms of where it is. But we're so conditioned to it. To see the RBA move 3 times in such a short period has made the whole consumer confidence number plummet, because we're obviously clearly worried that something is going on in the economy that's slowing us down. Consumption, therefore, has been the biggest concern. The lowest level we saw since basically the second quarter of 2008 at last week's GDP, and then the numbers we saw from Westpac yesterday confirm that. So although we are in Christmas, And there is a sign that we might get a slight tick up in November because we saw some very good numbers coming through from the Black Friday and Cyber Monday sales. Overall, it's still very, very weak. We are really, really worried about jobs. And we're really worried about our savings.
Yeah, that is a concern, isn't it? Especially heading into Christmas. Evan Lucas, thank you for your time as always. Talk to you soon.